All right, good deal. Well, it's 12:30 Eastern Standard Time for Real Fridays, and just as a precursor, look, Real Friday is just all things mortgage, real estate, innovation, leadership, tech. So certainly glad that I love it's. Look, it's I love getting together with you guys. It's really one of the highlights of my week, to be quite frank. So I don't know what that really tells you or what the reflection of that really means, but I barely even recognize you, Brock. Brett, brand new haircut, nice and trim.
It's a whole new world. And now that I'm finally back in New York after all these weeks and months on the road in the mortgage industry circuit.
Yeah. Actually, on a separate note, and I know, Brock, you're from Maine, and certainly if you know anyone from the Portland area that were affected by it, I being from Vermont, I've just been sort of obsessed with with how this is impacting everyone in New England, especially with the killer still on the loose. I mean, he could be in New Hampshire or Vermont. But any local word? Did you check in with family and friends for what's been going on in Maine?
Yeah, it's absolutely horrible. It's a little ways away from most of my family, but it's really close to where I went to college. I know my school that I was supposed to have like an alumni weekend or something. That's obviously been canceled, and like the whole school's been locked down for a couple of days now. It's maybe 15 minutes away from where this all started in Lewiston. So that's probably my closest connection. But otherwise, yeah, I have some friends and colleagues all around that Portland and Brunswick and Lewiston area. So yeah, it's absolutely crazy situation. I think everyone's kind of staying in place, and I've heard grocery stores across the state are closed and all kinds of stuff. So
yeah, no, look, I've been thinking about you and everybody that I know in Maine. A lot of realtors I've worked with in the Portland area, and it's just totally traumatic and devastating. All the realtors and that I'm connected with on social, and several mortgage bankers up there are all just under lockdown, and it's just a terrible, terrible situation. So certainly been thinking about you, man. Sending your family good vibes, and hopefully sounds like everyone is safe, which is good. So
yeah, I think so. But yeah, crazy situation. So heart goes out to everyone there.
So I know one of the things we wanted to talk about was title, and of course, as a retail originator on my side, title is probably one of the least areas of expertise or knowledge that I have, both on the innovation. Like I sent you an email earlier, guys, about how there was a new tech company down in South Florida who raised $1.5 million to innovate on title search. And I'm sitting there thinking, like, what is there to innovate when it comes to title search? What was it? Title EQ is the company that raised $1.5 million. What is it that hard to do searches on title? Like, what's the real innovation that can be? And I could be completely ignorant on the subject, quite frankly, but it just seems like in 2023 it shouldn't be that difficult to search on liens and other things on properties. But what is there to innovate on title, Jeremy?
Well,
let's start with you.
Thanks, man. Well, I appreciate it. I'm glad you started with some thoughts. Brock, I was also thinking about you a lot lately as a result, being a home stater. But I'm happy to talk about Mainers. I know. Well, I'm from away, so I will never.
It's half Mainers and half Maniacs. You don't know until you meet us which one.
Yeah. But I do like that we picked a topic that I think there's been a lot of headlines on, but not a lot of discussion of recently in title. And so I want to just take a quick clarifying step back a bit. I mean, I think, to be clear, one of the biggest areas of title and the company I think that raised the money that you were talking about, Rick, was actually in home equity title, like fast equity, home equity title or coverage. The search, I think, was that Israeli company launching. Maybe I have that backwards, but my point is
you have it right.
My point is this, that I believe title has become a hot topic for two reasons. One, we've spent a lot of time methodically moving through the mortgage and real estate process and applying technology to the most labor intensive or expensive pieces, right? Things that involved humans. Mortgage underwriting is a great example and took many years. Appraisal happening in real time also took many years. Fannie Mae started their appraisal modernization project over 5 years ago, or 5 years ago, whatever. So it was a natural order of things that we would get to title, which is another long pole in the tent, another expensive, like, manual piece. But it took getting through some of the other ones to get to title. And then, of course, second, Fannie Mae began an attempt to modernize title or look at title. A market participant found a kind of antiquated provision in attorney opinion letters, dusted it off, and said, let's use this again. This has been here all along. Let's revive it and use that again. So that brought title back to the forefront as well. So a lot of people in our industry, mortgage loan officers, mortgage companies, are now being asked, like, what do you think of AOLs? What do you think of title? But largely, real estate agents and mortgage companies are like, I don't know. What am I supposed to think? It's a fee on the fee sheet, right? Like, what is my role here? I don't understand. Now, real estate agents may be differently because there's more joint ventures there. There's more affiliations. Mortgage, with refi at least, has the affiliated title company that just does the refis. But that wasn't really a deep understanding of title. That was sort of like a refi agent for you. And it worked. It worked great. It was a really good business opportunity for everybody, real estate, mortgage. But one of the things I tell title when I talk to them, you'll get from the title side questions to us or to me around, well, why is it so misunderstood? Why don't people understand how valuable we are? Why don't people understand our expertise? Why don't people understand how hard it is to do what we do? And my answer across the board, I hope I'm right, but my answer has been, for the last 30 years, you've been saying to your real estate and mortgage partners, don't worry, I got it. Don't worry, I'll take care of it. Don't worry, consider it done. And that consider it done mentality has meant there wasn't a deep understanding of what was going on behind the curtain. What did happen was a really high degree of trust between the consider it done person and their referral partner. So title created incredibly strong relationships with their referral sources by saying, I'll get it done, and getting it done. But what they didn't do was let anybody in to the process about why it's so valuable or why it's so hard. So then, fast forward 30 years of that, it's not surprising that somebody would look over there and go, now, wait a second, what are they doing over there? I know they keep, like, I know I trust my guy, but, like, why does it cost that? And are we sure we can't apply technology to that? And so increasingly, technology was applied to that, but it was largely applied to the low-hanging fruit. The low-hanging fruit being, what's the fastest way you can get public records from A to B? So that, I would also say, it's probably worth mentioning here, there's been a lot of money spent on settlement, and sometimes title and settlement get put together because the agent or the title person is also conducting the settlement, conducting the closing. But sometimes you hear, like, oh, there's all this money being spent on title innovation. But when you, like, kind of really dig in, what you find is it's moving money, scheduling the closing, appearing at the closing, or signing at the closing. That's actually where all the VC money went, Reese, over the past 4 years, 5 years, 10 years, not to, like, title insurance and lowering the premiums, lowering the risk, using data in smarter ways relative to that. So I can talk all day about maybe why that happened that way or where we go from here. But I think that lay of the land is just important to know. Title did a really good thing building trust with their business partners. But in the process, I think overshadowed or made it hard to understand what is happening relative to search and exam, curative title risk, and then what actually title insurance covers and why.
Well, the CFPB focus from a regulatory standpoint for probably 6 to 8 years was really on the lender realtor relationship. And probably around 2016, 17, 18, there started creeping up some regulatory enforcements against the title realtor relationship, right? And then we really haven't heard a lot about that, right? So it tends to, fear in the marketplace tends to sort of dissuade the innovation, because we've talked about bundling the mortgage title and the sort of the realtor component to it all into one sort of bundled sort of transaction, which sort of begs it kind of begs the question why Zillow hasn't solved this when they solved the question around looking up the appraisal and having a really democratic way of looking at listings and all the sort of the public record information on the property. I know Zillow bought Spruce back in a few months ago. I think it was in August or July. But so Zillow has got to be in the essence of sort of combining and consolidating mortgage, real estate, and title. This has to be on the roadmap. I mean, I can't imagine how it couldn't. I just don't see how Alta in the sort of the legacy interests either push back or embrace that change or somehow, assume that innovation as part of its own strategy or not,
Well, I mean, I think that when you talk to title companies, title underwriters, or Alta, what you'll hear is they are willing and able and prepared to innovate and modernize. That there doesn't seem to be any
It's a talking point, though. The problem is there doesn't seem like there's much of a roadmap. Yeah,
exactly. And so real talk, real Fridays, right? The question is, how do you move from an environment where tech resources and innovation are siloed to the underwriter? That's the question. The underwriter has a captive audience on their tech stack, and they only push out technology innovation sufficient to bring them more market share through their dedicated channel, whether direct or with agents, right? And so that's the question, is like the interoperability across the market, comparing apples to apples, making data transparent, accessible, and visible to all participants would dramatically change kind of that modernization and innovation landscape. But for now, it's been, I have my tech stack and I don't want to lose market share or cede market share to the other big players. So I have to lock you into my portal, my tech, because it's my paper. I'm the one taking the risk. And so there is an inherent conflict there that I don't see being resolved. So the question for you that you posed is, could a market player outside of that, either as an agent, the way Spruce is now with Zillow, or someone else, actually create a scenario where an agent could create that disruption? They still have to work with an underwriter. Even if Zillow plugs in the easiest to use button, push button, get title, to kind of jokingly steal what Rocket did for a mortgage, like, you'd still need to get it from an underwriter. You're still going to have technology limitations then. It's not an available marketplace where you see them all and you pick one the way you would a mortgage in Optimal Blue.
No, are you talking about the title insurance package? Are you talking about
yes?
Well, but isn't that? And correct me if I'm wrong, and I should know this. Forgive me, but isn't what the automated assignment of title or the insurance binder on a does not skip the underwriting, because it algorithmically assigns the risk, and so it kind of automates the underwriting process, so you don't really need, quote unquote, an underwriter, right?
I guess what I'm saying is I don't think anyone's doing that, really. I think what people are doing is doing a risk analysis and saying, can I afford to take a risk here that I'm not going to find something later, maybe on like a refinance especially. But what you're Doma's trying, I've heard, to make it an algorithmic risk calculation. Well, what I guess my question would be is, have they showed lower prices sufficient to what you're asking about? Because simply just making it automated in the application process doesn't automatically lower prices. If you have to hedge capital to pay off the risks that you didn't search for, right? Yeah. So their risk calculation might be great, but if it's not actually lowering the cost because you still have to hedge capital to pay off what you've projected, it's the same price, it's just faster. So I guess what are we asking?
From what I understand, they do. From what I understand, it does lower the costs to the borrower, obviously, and I think that's been their main value proposition in working with Sandra at FHFA to basically say, hey, you could skip this whole process, make it cheaper for the consumer, make it more affordable in an uncharacteristically unaffordable environment. Obviously, there's tech solutions and then there's industry solutions, right? And the problem is the industry is more married to the way things have been done in the past versus a tech solution, which is trying to move those markers to a new way of doing things for the future.
And has there been anything quantitative to say? Well, let me back up. So, like, we started with mentioning the AOLs, the attorney opinion letters, and whether that's a faster way to do it, or maybe I don't know much about DOMA, but maybe they have a risk calculation that makes it all a little faster and a little cheaper, and you can hedge. What I've never seen is anything quantified to say that, if we take this many fewer steps and lower the price this much, your risk goes up, how much in tandem, right? So, I mean, when I was at EasyKnock running our partnerships, I got pitched AOLs about 100 different ways because we had 2 or 3 title transactions on every home with the sale leaseback model. And and who knows if they're doing it or not. I've been gone from EasyKnock for a while and can't speak to that. But it always seemed like something that people just didn't really understand the risk profile of. So you just continue to have your guy, you continue to have your silo, and so why not?
Well,
Just think about it this way.
One question from a LinkedIn viewer, basically he's asking, what is an AOL, and really how does this? I ad-libbed a little bit by saying, does this really move the innovation needle? And is there any real efficiency, or are there some risks being ignored? What do you say to that, Brock? Because I'm not as familiar with it.
Well, no, I'll jump in here. Yeah. Brock, hold on one second. So, attorney opinion letter is the way that the chain of title was reviewed prior to insurance, right? Like an attorney, a real estate attorney would look at the land records, do the search and exam that we're talking about, take a look at it, and write a letter that says, like, you're good to go as a lender. Hey, you can lend on this because my opinion as a real estate attorney is you're protected. Then it became, can we scale this? This feels manual, right? So an insurance product stepped in to say, why don't we just skip over a professional opinion letter, and why don't we just insure over the risk? Here's the premium, here's the risk, title insurance is born, right? So AOLs actually go back and, like I said, dust off a provision that existed to say, for some properties, could an expert look at search and exam results, which are being automated and they're faster and better, as Rick alluded to earlier, and just take a look at it and say, you know what? No insurance needed. You've got clean title or clean enough title, right? And then you have questions about the real risk. That's a good lead in to that question, which is, what if I'm wrong? Attorneys make mistakes, not often, right? Attorneys are usually perfect, but every now and then, attorneys make a mistake. And so what does it go to? Does it go to their professional liability insurance? Does it go to their E&O insurance? Like, there's still somebody that has to jump in at some point.
Well, and what happens when the attorney goes out of business or they shut down their firm? Like, how does the E&O carry over?
What's the difference?
Or the entitle builds on each other, right? So then it's like, can the next transaction follow off the basis of this AOL?
So where did everybody believe the low-hanging fruit was for refi title or for AOLs? It was in these properties that are getting a title insurance policy again that have just refinanced 2 years earlier or 18 months earlier. Somebody looked at that and said, all right, we just did a full title search on this in 2021. Now the home's being sold. Do we need a full title process? And so AOLs and faster title or these kind of limited opportunities for coverage are a response to that. There's a real credible argument to be made by some to say there's a homeowner somewhere in this country who refinanced in 2016, 2020, 2021, and 2022, let's say. They did 4 refinances. Like, what was their title premiums on that house versus what the risk was? That's what the CFPB is looking at. That's what FHFA is looking at. The title industry is going, listen, you don't know what was happening behind the scenes with all the bonkers cases, which wasn't that exact clean scenario, but the myriad of other people who had this lien and that lien and didn't pay a contractor and had this mess. And so the real risks here are really related to what is the actual legal cost and level of effort it takes to feel like you have clean title. And I think there are some properties increasingly that FHFA and homeowners and realtors and lenders are going to say, I don't think we need a full title policy on this. That, to your question, Rick, is when that happens, especially in a refinance situation, what is going to be Alta's response? Is it going to be just, continue to fight any threat or perceived threat by innovation or new things or old things dusted off again? Or is it going to be actually there's a there to use data differently, to use data in a uniformed way, and to really start to measure which are the properties that have thorns or thorny chains
I think
and which aren't?
And I think that's DOMA's. And again, you may not know a lot about DOMA, Brock, but I might be one chapter ahead of you. I don't really know a heck of a lot myself, but from what I understand, from what I've read from their website and in some of their press releases, that's exactly their value proposition as far as assessing the algorithmic risk that they feel is sort of unfairly uniformly applied to every property when the claim risk on properties aren't uniform, right? And
Yeah.
so as a result,
it's an easy concept to agree with.
But it's
you
not.
know,
But in practice, it's just not. It's just not actually taking place. Which is
that was
Jeremy's
kind
point.
of at the very beginning. I think I really like what Jeremy said of like the whole industry is kind of hidden behind like they have a guy, they have a process, they have some black box that they throw their title process into, and never really learned about it. So I'm in that camp for sure, where I get I advise some VCs and consult for some startups and stuff like that. And every now and then something related to the title process comes in, and I'm like, yeah, I don't know if that's venture backable. I don't know if that's a good investment. The concepts are great. It's an antiquated thing that tech should solve, data should solve. We have that tech, we have that data, but unclear who's solving it. To me,
I mean, one of the things that makes me ambitious about this area as an area for innovation is there is a roadmap in other industries that say giving experts technology to make them better experts is a well-worn path to success.
Yeah.
Other industries have seen this. I like to use the example of radiologists, but I could use F1 drivers, like you tell me. But like a radiologist can get sent imaging from a hospital in Detroit to Johns Hopkins in Baltimore or to UCLA in LA, and they can look at the human body, and a radiologist can do diagnoses and other expert things via technology to accurately assess a patient in Detroit, right? So that doesn't make them less of a doctor, right? They are actually using technology to scale their expertise and scale their reach and scale their business. Same thing for appraisers, same thing for title experts and title attorneys, same thing for mortgage loan officers. It isn't going to make you less of an expert to use technology. And if you think it is, I have bad news for you. That means your value is tied up in something other than your expertise, and that's risky. So for me, when I get the chance to talk about title folks, title experts, title attorneys, my view is if you're hiding behind a law that says I'm important because the state law says I have to be there at closing or I have to issue this type of insurance policy, and your strength is in your state legislature, like that's not a great place to be. You want to be scalable with technology where the technology does work for you that makes you less productive. The work you're doing makes you less productive. The technology will make you more productive, right? And then you can really, truly be the expert. I will tell you, there's a ton of liability out there in residential real estate. The example I like to use is when I was in law school, the number one type of case, instance of lawsuit in the country at that time was homeowners associations. Homeowners associations and condo associations. It was more than medical malpractice. It was more than slip and fall. It was more than car accidents, despite that we see personal injury attorneys on every billboard. It was actually homeowners associations, condo associations, just because the frequency of the issues. There's so many issues. So I think there are really hard problems and really hard, complex problems for us to be solving in housing, and to be fighting over the annoying, the dumb stuff, to me, is just a waste of human potential. We need to be escalating ourselves as industry professionals, title professionals, using technology to really work on the hard stuff. We need to be scaling renovation. We need to be scaling condos. We need to be scaling multifamily housing. We need to be scaling single family builds. We need to be coming up with flexible single family rental types of structures. The only way we're going to do that is unlocking people from working on the dumb stuff to working on the really exciting stuff. And so like, that's where my head's at when it comes to like specifically technology in the title space, but it goes in every single piece of our ecosystem.
So do you know, has Alta? Yeah, exactly. I don't even know if it's, sometimes we take for granted that people will know that you're a lawyer and where you went to school. So I just wanted to put that out there. But has Alta embraced AOLs?
No.
Or so they're against that. I know the NBA put out a statement this past week, and it was intended to be like, we don't advocate for this, but we just want to sort of highlight the strengths and the weaknesses of AOLs. And it was a kind of an AOL opinion letter. I don't know if did you guys see that?
Yeah, I took a look at it. I mean, I think that to answer your Alta question, I think it comes down to the value and the expertise involved, because I don't think you'd hear from Alta that they have any concern with real estate attorneys being expert real estate attorneys.
Yeah.
They want to support, especially the states that are attorney-based states. I think the question becomes like, are you using this because you think it's safer than title insurance? Or what are you giving up if you believe it to be cheaper than title insurance? And I think they're trying to correct the misconceptions, but it's hard to get everybody on the same page, to your point earlier, because you hear so many competing things. So I think the NBA was like, well, the membership of the NBA went out and said, let's get a couple of high profile members said, let's get a report, give it to the NBA and see if the NBA wants to distribute it or not. And so it's not the NBA's report per se, but it is the NBA saying, hey, let's get educated on this. And I think that makes sense.
What's interesting to me is in the opinion letter, it talked about how this one Voxter AOL, which is one of the vendors or one of the firms that produces these, caps the claims at $50,000 an incident, which I think that's one way of minimizing your risk, is just not covering by capping your exposure. But $50,000 is not a lot when you have an issue with a driveway or a property line or a well or something that's sharing in the adjacent property. So it is kind of interesting to see, and maybe it's sufficient at the same time, given the infrequency of claims. I don't know, but that was the first thing that jumped out at me when I kind of browsed this non-endorsement / circulated opinion letter by Blank Romer, an explanation.
Well, I think what I was getting at earlier was like, it would be really great if we could grab nationwide data on title and actually compare it apples to apples across claims and across underwriters and across the industry, because I think you'd have a real sense then of what the actual cost is to defend a title claim versus settle a title claim versus resolve a title claim. There's a bunch of different ways. I think the industry, from a title perspective, I actually think the industry does a good bit of settling these claims, working these claims out amongst themselves with agents and underwriters, and they never get put in the claim category, but it's expensive. It's the same thing, Rick, that you've seen for years between mortgage brokers and lenders. Sometimes the mortgage broker makes a mistake, or sometimes the mortgage broker asks the lender for help. And the lender's like, yeah, I'll help you out on it. It's expensive sometimes to help mortgage brokers with certain like lead gen stuff, or with certain issues, resolving customer service issues, resolving fees, like giving them price discounts even because the customer had an unexpected death in the family or an unexpected delay. Like a lender and a broker would work that out. That wouldn't necessarily fall into like a specific bucket other than maybe business development or whatever for the lender. Well, similar with title underwriters work out stuff all the time with agents and borrowers, and that goes to the cost, but it doesn't show up in the claim number. And at the same time, when you do look at the claim numbers, I think a lot of people, especially on the mortgage side, would be like, wait, that's not a high number at all. Like, that's a really low number. And so that, like, under the hood cost versus what's the public cost, I think all of that plays into your question and to whether or not we should look at alternatives. And so to me, that's like prime for data. It's like that. Yeah. The answer to this is like, it's in the data. Can we get the data and scrub it in a way that allows us to actually know the answer? I think the answer is eventually yes. That's what I'm working on. Data.
Well, and I was going to say, UWM has been in the news about how kind of bullish that they've been on leveraging AOLs.
They've definitely tried it. They have a product. I don't know how many they've actually written, but good point. They are out there as a lender saying we're willing to accept them. And not everyone.
I think especially in today's environment where trying to reduce your costs in any way that you can, especially at that kind of volume, and they're trying to push that savings or to some degree, they already have such a margin, an aggressive margin strategy into the marketplace. So I'm sure on the back end, they're trying to say, well, how do we reduce our operating costs associated to things like title, appraisal, and the escrow process.
With their DNA and brand, it seems like that's a pretty logical place for them to go to try to cut the margins even further and get the best pricing out of all the brokers. Yeah.
I have a couple minutes here, and then I'm going to have to drop. I apologize, but I had a question for Brock. So one of the things I've always been curious about as I've dug deeper and deeper into title and title insurance is, and again, I was mentioning how appraisal modernization has paralleled this in some way. But the question I had for you is how has it become the lender's problem and not the seller's problem? And can we make that shift credibly and actually have it happen that the seller actually sells the property with clean title, A, and B, the seller sells data with the property to the buyer, whoever won the deal, that enables you to get title done and appraisal done very quickly because you've consumed the data with the listing that you just won the contract for. We kind of are doing things backwards, and I'm curious if you've given any thought to like how I or we as innovators, we could make the real estate community better situated to actually sell homes with clean data.
Yeah, for sure. I mean, it's a little bit further from my purview, you know, or day to day on what we're doing at NewsZip right now. But you know, when I was at Rocket Homes and even at Easy Knock a little bit, it was something that came up pretty often where we would. There's always been kind of a sense of like, before listing, can we do everything you said? Can this be, you know, home sale approved? It might be a buzzword, or you know, I've heard 10 different ones, right? Where it's like this listing is fit to ship, you know, close in a day, close in an hour, because we already did everything, right? Close as quick as you can get a price lock or whatever, right? Or at least go pending, right? And so that's kind of always been a goal that I don't think there's. Why would a seller do it, right? The seller doesn't. You know, I've heard concepts of you know, sellers will get a better price because their listings better. That hasn't been shown, I don't think. I think other than maybe a company at tremendous scale like Rocket or maybe UWM or maybe one of the like, you know, larger real estate conglomerates like, you know, Berkshire or Anywhere or someone will just think from a brand perspective, it's worth it to have like the most clean, you know, pristine listings and having, you know, pre-screen title or whatever we want to call it, so that instant sale is approved, would be a way to do it. But I haven't seen anyone quite take that leap. I think its incentives are a little out of whack, where maybe some big brother, whether it's a corporation, a government, a group, whatever, needs to sort of incent it somehow.
All right, that makes sense. I appreciate that. So I'll end on this, and then I'll let you guys finish up. But I'll have to drop, unfortunately. If you're interested in that, if you're watching this, you're interested in that. So at Title Look, I am really thinking about if a real estate agent's commission were to go down, or they wanted to discount their commission relative to what's going on in the market, be more competitive, cut costs. Could we sell data that then allows the incentive? So could the seller's agent and the seller actually benefit? Talk about incentives. I'm going to get X for my marketing and sales of this home, the way the commission is meant to be tied to. And also I'm going to become a data provider to the buyer because I want to then make additional revenue off of a data packet or a data package that the buyer can trust, that the buyer can pass on to the lender. Let's get this deal done faster. Lender's happy, buyer's happy. I really think there's a version of the incentive there that we could make sellers agents and sellers data providers and not just marketing the property and negotiating price.
Yeah, I think
throwing
there's
that out there.
A long list of people that could help, let's say, sponsor or incentivize that, right? Whether it's you know, something related to moving, something related to the actual listing, something related to the new buyer coming in. You know, there's a laundry list of people that might help sort of sponsor that if you made it easy. So that's interesting. Right on.
All right, guys.
Good.
Great talking to you as usual.
Hey, I appreciate you jumping on. And Brock, I got to run to the conference here in Dallas. But good to sync with you guys. Really appreciate your thought leadership. This is an innovative subject to talk about. So
same to you, man.
Talk to you guys soon. Until next time.
Be safe.